Hello everyone, welcome back to the channel. If you are someone who's looking to invest into the Chinese stock market, you're probably out there looking at different types of videos, fundamentals, technicals, but nobody will be answering the one question you really want to know. What you want to probably know is which ticker to invest in, which one will give you the most return on your investment, because the last time the Chinese stock market pushed up, Alibaba gave about 180% returns versus JD gave about 95% return from the bottom. So if you stumbled upon this video today, this is your lucky day because most people out there won't be able to tell you what exactly to look for to determine which stock pushes up higher. And I'm coming from a perspective of experience because last time when Alibaba pushed up, I was invested into Baba, and this time around I'm going to be investing into JD. And if you hang around here with me for the next 5 to 10 minutes, let me explain that to you in detail of why I think JD will push up higher this time around versus Alibaba. Now, none of this is financial advice, so please take it with a grain of salt. With that said, let's get started. Between the years of 2024 to 2025, the Chinese index called HSI started to break out, and the clear winner out of that floor formation was Baba. Baba gave about 180% from the lows, and then if you compare it to other tickers like JD, it gave about 95 to 98%. The reason for that was very simple. When the entire index is compressed, you want to pick the biggest, baddest fish in the sea. And at that point, it was Alibaba stock because it was a familiar name. Everybody knows it. The fundamentals are easy to understand. You can compare the business to Amazon's business and just go along. Despite the fact people still went ahead and diversified their Chinese index and they ended up buying some JD, some PDD, other small tickers, but most people that I know had a heavier size into Baba versus other tickers. And I'm talking about people who were doing position trading where they were just scaling in slowly to capture those gains. Then comes the second group who started to see the breakout and ended up FOMOing above 110, 120, and they are the ones that are getting liquidated right now, and they're getting stopped out and they're getting frustrated with the stock, and they might never come back and buy the Chinese stock market or any of these tickers again. Then there's another group who was smart, who started to watch this and they were like, well, we missed the boat, but if we get an opportunity to jump into the stock, we'll probably do it in deep value zone. And I think that group is still going long on this ticker. And I'm explaining you all of this is because when you look at a price action, it's just not random candles. You can't just be like, oh, well, this is support, this is supply or resistance or whatnot. You need to understand the emotions people are going through and who are you trading against. The next group you can see is the one who purchased these other tickers, JD and PDD and whatever else they bought into. They're thinking that if Baba gave the best returns compared to JD, why are we holding this ticker? We should just exit and jump into the Baba trade. So when Baba returns and goes back up above 100, goes towards 200, they won't be the ones sitting on the sidelines and hoping for better returns. They're going to get that 100% plus more. And I'm not making this up. You can tell by the chart. The previous swing low for Baba was between 67 to $80, and for JD it was between 24 to $26. And JD is already down, which means there are more sellers in this stock versus Baba, and there's more buyers on Baba versus JD. If you were smart money right now, which one would you pick? Would you pick Baba, where people are already trying to jump into the trade? It's like pushing through 40 to 50 people through a door when it was only designed to push through 3 to 5 people at a time. And that is what's happening in Baba. You cannot be a large player and be able to take a position without a liquidity event on this ticker. And in my opinion, that liquidity event sits under $80 or even possibly under $67. Most likely, I think under $80, we will start to reverse Baba. But on the other hand, when it comes to JD, we are already close to a liquidity flush area. And if you notice closely, we have created one low at about 24.13 area. Then we got another low, which is a little bit above that, and then equal lows again. So if you were a smart money buyer, you would probably create a scenario where this ticker flushes down below 24. This is where all stop losses go off. You accumulate your large position that you want to, and then you run it back up. And this time around, because the smart money is pushing JD and they have accumulated JD rather than Baba, JD would have a better response on the way up rather than Baba. And this is just my personal opinion. I'm just creating a thesis here. And I'm going to put my money where my mouth is, because the moment we flush under 24, I will take a long position. Now, some of my friends have asked me, why aren't I just accumulating around $25 to $26, which I do believe is super cheap. But I've mentioned the same thing to my friends, what I'm mentioning to you, that unless I see the liquidity event where big money, smart money can have the opportunity to jump in, I am not taking this trade. I can sit on the sidelines, I can sit on my hands with a lot of patience, and this is why I made this channel for people who have too much FOMO and who do not have the patience to just sit on the sidelines and wait for the exact setup to get triggered. The second reason that I think this will be the better trade is because if I enter at $24, notice that to previous lows, my drawdown is about 13%. If I go even lower, which is pretty much the book value of this company, I'm seeing maybe a 20% drawdown, and that is like absolute max, right? And that's from my entry. But then on the upside, I can see 80 to 100% easily. Let's go to Baba, and let's suppose we enter at the flush of $80. Let's say $79, right? Let's say I enter at $79, we go and flush to the lows. We are already at the drawdown as 26%. If the market goes even lower towards 50, I'm looking at about 35 to 38% drawdown. Now, you can sit here and argue like, no way Baba goes down that bad. But then again, when it comes to market emotions, charting, and technicals, you just really don't know how bad a stock can get hit. A few years ago, if you asked me, can Baba ever see a drawdown of towards $180 price range, I bet you some professionals probably said that is no way possible. So that is why I'm mentioning you the downside of such extreme, because if I enter JD at $24 and below, I can sit through a 20%, 25% drawdown with no problem if my upside is showing to be about 100% from here, right? So that is my analysis. It's really simple. It's mostly emotion based, mostly understanding where the money will flow out of, where the money will flow into, and what is happening right now between the charting of Baba versus JD. So here it is, guys. The perfect ticker, the perfect entry, and a very good risk reward ratio. With that said, hope you found value in this video. Please leave a like, comment, and subscribe to the channel. I will catch you on the next one. Thank you so much.